At the moment, even after taking account of the initial injections by the state of 3.5 billion each in the case of AIB and Bank of Ireland, followed closely by a further 3.8 billion into Anglo-Irish Bank, that brings the total of the Irish state investment into the banking sector to a level of 10.8 billion. That 10.8 billion is within the shareholders' funds on the last reported balance sheets of the banks, some of which were at June, others March, and the small building society ones as at December last. Combining the shareholders' funds as at the most recent date, there's a level of 26.85 billion of shareholders' funds, and that includes the 10.8 billion injection by the state into AIB and Bank of Ireland at 3.5 billion each, and the 3.8 billion in April-May into Anglo-Irish Bank. To keep that level of capital, that's 26.85 billion, and to cover the write-downs necessary on the 77 billion will require a fresh injection of 31 billion euro. Interestingly, only today, that is Tuesday, the 6th of October, a report in the business section of the Irish Times shows that JP Morgan, doing a review of the weakest banks in Europe, determined and declared that the two main Irish banks require an immediate capital injection of $17 billion. That $17 billion at a rate of exchange of $1.45 to the euro works out exactly at a level of 30% of the NAMA loans that are earmarked for transfer from AIB and Bank of Ireland into NAMA. But that is at a level of write-down of only 30%. And many analysts with very solid experience in this area know that the firmer level of 40% write-down is minimally required. In fact, experience shows in comparable type markets historically around the globe that the level of write-down on collections is often 50% minimally, between 50 and 60. But there has been a marginal amount of write-off already, so I think it would be reasonable to say that a minimum level of 40% would be prudentially acceptable for the Irish banks.